Today, so far, earnings have failed to lift the bourse, which is down 7% this quarter. Ayodeji Ebo, head investment research at Afrinvest, joins me now to discuss the outlook for bank stocks and to review some of the numbers reported so far. Thank you so much, Ayodeji, for joining us. It has been pretty weak, but it was widely expected, so no one is surprised at the quality of earnings we've seen so far. But let's focus on what we saw on Friday, because Fidelity Bank and Diamond Bank were some of those that reported. Obviously, significant pressure there for Diamond Bank. Fidelity Bank probably doing relatively well in the context of the earnings season. But your takeaways from those numbers?
Okay, one common factor to first state is the surge in impairment charges, right, which you can easily attribute to, one, the loans to the oil and gas space. In terms of, we are all aware of the amounts the government is still owing the marketers on subsidy, right, which you know that they will, based on how IFRS impairment charges is constructed, you need to make provisions for those loans. You also look at in the private sector lending, public sector lending rather, a lot of salaries are still being held up as high as 6 months. You know, most of those loans too will be also classified. Impairment charges will also increase on them. The credit line to most of the state government too, most of them are not. They will also need to make impairment charges around that space. So when you look at some of those dynamics that when you aggregate it, you expect that the impairment charges will be like a common decimal to them. So it now depends on how the bank's ability to earn your margin, your top line, to absorb the increase in the impairment charges that will determine what you're able to deliver.
You've just highlighted
bottom line.
So you just highlighted two interesting areas. But what about the consumer lending? Is that a pressure area for banks as well? Are we seeing that, or is it a case of that still being a very small piece of the pie when it comes to the loan book?
No, it's I missed that out.
Okay, so
it's also very
also
significant because devaluation has affected the consumer goods. So for most of them, they require more naira to service some of their dollar-denominated loans. Right. So it will also affect, even if the bank feels that the bank has edged from its own side, for the borrower, you need more naira to service your loan. Right. So you may not be able to meet up with the obligation.
You're speaking about the consumer good companies now, but I'm actually looking at consumer loans now. So the individual retail banking loans. Is that a pressure area for banks as well, or are you not really seeing that at the moment?
For loans, consumer lending loan within the private space, I don't think we've seen significant retrenchment within the private space. So I still believe people will, staff or workers within the private space will still be able to service their loan as appropriate. All
right, so let's focus now on Diamond and Fidelity. What were the big takeaways for you?
Yes, for Diamond Bank, which we know and more exposed to the SMEs lending, and over when you look on quarter-on-quarter basis, impairment charges have continued to rise. The pressure has continued in that aspect, and in terms of non-interest income, has also been very challenging. So we feel the bank just needs to see how you need to come up with how you can help improve your non-interest income in terms of coming up with services that will be value-adding to your clients. They also need, in terms of efficiency, Tier 1 banks, which we know GT, cost-to-income ratio about 42, followed by the next is 55% cost-to-income ratio, Zenith Bank. So most of these banks need to ride on technology to bring down their costs, so that they will be able to absorb even any impairment charges surge or challenges that have been pressuring income, which is the top line within the banking space. Right.
What about Fidelity Bank, though? What did you see? What was the positive for you in terms of Fidelity Bank's half-year earnings?
Yes, surprisingly that even despite the challenging environments, they are still able to report positive year-on-year growth in terms of the top and the bottom line, which can be linked to increased lending in terms of loans, to which earn them significant interest income. What some of the banks have also been able to do, which I think Fidelity did, was to also try and increase lending to the small and medium medium space,
yeah.
such that because of the spread between the prime lending rate and the maximum lending rate, you lend at the maximum lending rate. There's a spread of about 8%. So you try to channel more of your funds to allocate more of your funds to that particular space to earn higher income to cover up for the income gap, which the CBN policy or the Apex Bank policy have brought about, which have pressured earnings.
So definitely pressure all around right now.
Yeah.
Okay, but do you think there's a need for capital though? We're seeing this in payments, charges, of course that erodes capital,
yeah.
But many will suggest that it's not significant. But your thoughts, because I think in the build-up to this, there has been already a lot of talk about perhaps some banks still need to show up their capital base. Do you think this is making it a lot more urgent now, or do you think capital is not a big issue for the banks?
No, it is a big issue. Part of what's a limiting factor to most of the banks growing their loans in 2015 has been limited capital.
Right, so capital adequacy.
They still need to, we expect most of the banks to still, before the end of the year or first quarter of 2016, to come up with initiative on how to grow their tier 1 capital. I know because of the sentiment within the equities market for now, most of them are opting for rights issue, where you get some core investors who are willing to take up at least above 50%, so that the rights issue is not aborted. If based on SEC rule, if you don't meet up to 50% of it, so you need to structure. Most banks, you need to structure out and be sure that you get investors that can subscribe or take up their rights.
Right. Okay, Ayodeji, let's leave it there. Thank you for coming in today. Ayodeji Ebo, Head Investment Research at Afrinvest. More